season 4 of Red Door Conversations. I am your co-host, Lisa White, and I get to share this amazing platform with 2 beautiful women. I am going to introduce them, but you guys already know them, but I'm going to reintroduce them. I'm going to start with the lovely Marla Lewis. How are you today, Marla?
Hey, Lisa, I'm so good.
How is HBREA going?
Oh man, the Houston Black Real Estate Association is on fire. I can't wait to update everybody with what we have been doing over the past year or so. It's been just great.
And let me say this publicly, you've been doing an amazing job.
Thank you.
I am so proud of you.
Absolutely.
And last but certainly not least, how are you, Miss Kimberly Dixon Dudley?
Well, I am well, gorgeous. How are you doing today?
I am wonderful. It's so good to be back in the studio with you guys.
I'm so
really
real. This is season 4.
I know.
Do y'all believe it? Season 4?
I know.
I am excited.
Exactly.
This is about to be.
It started in your living room, if you can remember.
Did it really?
The first meeting, we met up in your living room.
We did. I still have those pictures. Maybe we'll share those pictures one day.
Yes. Trying to come up with the name.
The name,
yes.
The theme, the door, but here we are.
Here we are.
And ready.
And
this is about to be a good season.
Yes.
Oh.
Hear me out, guys. You don't want to miss not a one episode. Okay? Not a one. Today, we have a jam-packed show for you. We're going to talk to you guys about the market. What is this Houston real estate market doing? I know, like us, you guys are wondering, why is everything just seems like it's been turned up 10 notches? No need to worry. We have an expert here for you today. He is with NRL Lending, and he is an expert in his own right. He has been in the industry for over 14 years. But before I give you any more information, I'm just going to have him come out.
Who's behind the red door, Lisa?
Well, let's see.
Everybody wants to know. Come on out, Mr. Mike Lewis. Mr. Mike Lewis.
Hey.
Yes. That's what I'm saying. That's what I'm saying. Oh, I love it. I love it. Hey, he may be new to you guys, to our viewers, our audience, but I've been knowing this guy for over about 25 years, I would say, about over 25 years.
Oh, yeah.
Yes, and so I am happy that he is here with the ladies of Red Door Conversation today. I'm gonna give you a little bit of information about him. So as I stated, he's with NRL Mortgage. He's a branch manager with NRL Mortgage. Been in the industry for a little bit over 14 years. He actually, guys, he is killing the game. He has a closed volume of over 165 million.
Wow.
And that equates to about 1,300 buyers. Is that right, Mike?
Wow.
Okay. And so he is originally from Bastrop, Louisiana, but he calls Missouri City, Texas his home.
Mo City.
There you go. He calls Mo City his home. Okay. And I can't sit here and talk to you guys about him and tell you all about him without telling you how he got here, okay? Okay, he is a member of Kappa Alpha Psi, and he is the husband to the lovely Iris Lewis, and he has 2 sons, Michael and Matthew. I give you guys Michael Lewis.
So I'm going to just jump right into it, Mike. What's up with these rising interest rates? And what effects are you seeing already with the buyers in today's market?
You know, Marla, and thank you for having me. Of course, you already know I love to talk, so it may be a little long-winded, but I'm going to get it out.
Well, that's why we invited you, Mike.
Okay,
We want all the juice.
Yeah, so that's a
All the tea.
question that's most often asked. Why the interest rate rise, and how will they go? When will it stop? Will the interest rates go lower? And that's a question that we always have to think about. Interest rates, and think about what's actually going on in the world and in international market. These things are what's really affecting our rates. I was speaking to someone the other day, and they asked the question why the interest rates are higher. And you have to go back to, okay, when COVID hit, there was a reasoning to lower the interest rates to make sure that people were able to at least function in the market. So those interest rates hit record lows, 1% and 2%. But as we know, with every good thing,
That comes to an end.
it comes to an end.
And it has.
And it has to be fixed. So once you bring rates that low, you bring it low where we actually had a supply issue that's been going on for the last few years. There's a supply and the demand issue, and it's caused what we consider inflation. So now we have a situation where interest rates have to be raised in order to correct everything that's going on. But just think about it. Interest rates are higher, but could be worse. 2006, 2007, these interest rates was in the 7, 8, and people were buying houses then. Not to say it's going to get that high. Don't scare anybody. But just think about that. It's always good to jump on it now, lock it in now while your interest rates are there.
So with the increase in interest rates, does that say to the consumer, okay, will this housing issue, will it stabilize? Is a higher interest rate an indicator that housing situation, because we're at about 1.3 months of inventory right now.
Right.
So is that an indicator that the housing market will become more well balanced, maybe, or not?
Well, that's the Fed's reasoning behind raising rates is to have less consumers purchasing. So it's to have consumers.
I want to make sure people hear that.
Yeah.
The reason that the interest rates are rising is because of what again, Mike?
To have less consumers purchasing.
Wow.
So they want consumers to purchase less, because we don't have enough supply to accommodate all the purchasing. Now, as to your question, if you have less people purchasing on the market, will it correct the market? That's the Fed's logic, is that if you have less people purchasing, there'll be less competition. There'll be lower prices. Yeah, there'll be lower prices. Sellers won't have to increase prices as much. There will be less competition. So with less competition, you have lower sales prices and all of that. But that's not to say that you should not buy. But we talked about this earlier on what is this 0.5 increase with Fed. Is it affecting mortgage rates directly? And it absolutely is not. The Fed's increase of 0.5 has absolutely nothing to do with the mortgage rates directly. What's happening is that indirectly, mortgage rates are affected because of the impact that it's having on everything else in the market. So will that 0.5 increase your rates? No. But indirectly, the Fed's saying that they will increase rates. The war in Russia, China's having issue with COVID. All of these things come together and create this vacuum of rates increasing.
So, Mike, you have been a mortgage professional for 14 years now, right? Okay, I have a twofold question.
Okay.
One, all of this is bound to happen, but in your experience, where are we in the next year, 2 years, based on rates? Are we going up to the 8s? Are we going to get to the 8 mark?
Well,
what are your thoughts? What's your opinion on that?
One thing about rates, if there was an expert to say rates will increase or not increase, they would probably be making millions and billions of dollars.
Right.
So you basically have to go by what's actually happening in the market. What you're asking is a great question, because people always try and determine what should I buy now? Should I not buy now?
Right. That part.
I hear that the
Don't
rate
buy.
is so high.
Yes.
Yeah, rate is so high. The price is so high. So should I buy?
Right.
Is it a bad time to buy? You hear that. Is it a bad time to buy? Good time to buy? I always say,
so
purchasing is up to that person who's purchasing. It has to be your season to buy.
That's right.
If it's your season,
that's right,
to be a purchaser or be a homeowner, you need to take advantage of your season.
That's you just hit on my second part of my question, was what type of season this is. This is aggressive seller's market. In our experience, that's what we would call this right now. Yes. So in this type of aggressive seller's market, what really do buyers, and when we say seller's market, meaning what Mike mentioned earlier, limited inventory, higher increase in pricing, what do buyers really need to do to help get their offers accepted in an aggressive seller's market? What do they need to include on their financing side?
There's a lot of options that are taking place now to actually get buyers into, in the front of things.
Right.
You have buyers, people saying the same thing in 2020. Don't buy houses, bad time to buy. But these people who purchased homes in 2020 saw a 30% increase in their value.
Wow.
So they're saying the same thing now. Don't purchase. It's bad time to buy, but you still will see that increase. Now, the ways to get in front and to make sure that your offer is being close to accepting is that you want to not only just get a pre-qualification or pre-approval, you want to go a step further. You want a lender that's going to actually give you an actual conditional approval that's actually been reviewed by the underwriter. So when you make your offer, you're not offering with a pre-approval, you're offering with a conditional approval from the underwriter, which basically says, this person is good.
So your realtor can call the other realtor and say, listen, they're not just pre-approved, they've cleared conditions. This is somebody who's going to close.
Somebody who's going to close.
Yeah. Okay,
That's
excellent.
usually the biggest concern on both sides. At the end of the day,
Is whether the buyer's going to
will
close.
this person close?
Okay.
That's it.
And how soon will they close? Because some people okay, I need my money now.
How soon can you close a deal?
So when you say close a deal, and that's a good question.
Yes.
You hear people say this all the time. I can close in 10 days. I can close.
Right.
Well, when you say close, it means actually from the time of contract and being submitted. From that term to close date is considered your closing time. We can close within 15 days if we can get the appraisal on time.
That part.
That factor actually determines the turn time. You have people to say, well, does a person be 100% where you can just say 100% this person is going to close? You can't say 100%, but there's so many safeguards that we do in the pre-approval process that you really have to really mess up some stuff.
Right. Go buy a car.
Right.
Before closing.
Because we have to run it through. And I tell people all the time, it used to be that when, 2006, 2007, we used to give big packages over to the underwriter. All your documents, give it to the underwriter. Don't do that anymore.
Really?
We basically run it through an automated underwriting system that's called desktop underwriting through Fannie Mae. Every lender in the world has to run it through Fannie Mae. And once they run it through the Fannie Mae, it's going to say refer or approve. When you run it through that system, that is the only thing that underwriters are looking at.
Awesome.
Okay. So you said it from the lending side. From the buying side, from the realtor side, our perspective.
Right.
What can a buyer do to ensure that their offer is accepted?
So there's so many things.
There's a lot of things.
Yeah.
I want our listeners to be able to get that information as well.
Well, one of the things that a buyer can do is this. Make your mind up before you go.
Right.
And I know that's easier said than done because I'm a person that kind of has to think about it a little bit.
Lord.
You don't have time to think about it. And so what that means is you need to make sure that you're committed to the process before you go and see a property. The internet is a beautiful thing. They've got multiple pictures on there for you to check it out. They've got tours. We've got all kinds of technology. So make sure that once you go, you are just solidifying your decision that you want to go ahead and make an offer and make that offer pretty quickly. That's one of the things.
Another thing that I thought about and just recently did, and I thought it was quite smart of me, have the inspector go along. If you're ready, like you should be, have the inspector go along with you on the showing. Most showings are an hour. Most inspectors can get a lot of heavy lifting done during that hour, and you can make an informed decision on whether you really want to buy that house. If there's something that that stands out that needs to be repaired. So that was just, it goes into your comment, Marla, making sure that you are fully ready to submit that offer and move forward. Put your best foot forward.
Absolutely.
Don't you touch that dial, because we're going to be right back. This is Red Door Conversations.
Hi, I'm Lisa White with GBR Realty, and this month's Builder Spotlight, we're featuring a local builder that is located right here in the Houston area. Park Street Homes is the builder, and their first project is Grand Park Square. Grand Park Square Phase 1 features 16 single-family homes with unique accents and finishes. There are no shared driveways, utilities, or homeowner association fees. Grant Park Square is one of the most highly anticipated affordable housing developments in the Southeast Houston area. Featured is the Arcadia floor plan. It is 1842 square feet with 3 bedrooms and 2.5 bathrooms. The primary suite has a freestanding bathtub and a double vanity. Additional features include recessed lighting, open kitchen, and a private backyard with a covered porch. It is conveniently located near the Texas Medical Center, NRG Stadium, and Herman Park. What's not to love? If you want to make Grant Park Square your forever home, don't hesitate to give us a call, text, or DM. We would love to work with you.
Welcome back to Ladies of Red Door Conversation. We have our guest with us, Mr. Mike Lewis. In our last segment, we were talking to you guys about how, as a buyer, you could strengthen your offer when purchasing a home. Mr. Mike Lewis told you from the lending side what you could do, and Marla and Kim gave their recommendations on what you can do. I'm going to close it up with what I think you should do as well. Higher earnest money. If your property is $300,000, don't do $3,000 for earnest money. Double that amount. Give more for your option money. Shorter option period. Accept the property as is and write a letter to the seller. A lot of times, the property that you're purchasing are the original owners. They have memories. Pull on their heartstrings. Write a compelling letter that will ensure that you can win the property. Did I miss anything, ladies?
No, I think you covered it. That was good.
Got it. Okay.
That will help somebody have a strong offer.
Absolutely.
That's likely to get accepted if
Absolutely.
they follow those guidelines. So Mike, what I really want to talk about, I'm going to transition into the financing side because people are tuning in for that. Buyers are needing to get creative with their financing. One thing we didn't mention is conventional loans are typically looked at more favorably than FHA loans in this particular market. But can you talk about the Ribbon program and some of the other lending options that are out there for buyers?
Yeah, and I wanted to start out with what you just stated about there are some who are looking at conventional loans a little more favorable than your FHA or your VA or some of your government loans. And the funny thing, I asked the seller once, I was like, so why?
Right.
And they told me, I heard it's a better loan. And they close more often. And then you have someone who said, well, the appraisal comes back at value with conventional loans as opposed to FHA. And I want to be the first one to tell you none of that is true.
Thank you. You heard it here first. None of that is true.
When it comes to the appraisal value is not based on the program. It's based on the comparables in the area and the validity of the home. So it has nothing to do with whether it's conventional or FHA. Now, FHA and conventional have their own things when it comes to the actual property itself, where FHA requires different things than conventional does. But just to kick that out, no, it
so the money is the same color green, whether it comes from FHA or it comes from a conventional loan.
Exact same. The thing is that I often say you have people who try to force a conventional loan. That's an actual FHA buyer. And in the end of the process, it becomes an issue. Because that person should have been an FHA buyer.
Oh, that's smart.
And the thing is, you want to make sure, and as a lender, our purpose is to put those people together, give them the options, but give them the best option that will work for them and work for their family. Because conventional is not always the best option.
That's right.
Or an FHA buyer. Now, when it comes to programs, you have programs such as the Ribbon program, and it's a great program. I've actually used it 5 times this year and got 5 buyers.
What is it though?
You have just another program with Divvy, Ribbon. They're about the same. So Ribbon is basically allowing you or helping you to make an offer as cash. So Ribbon makes a promise that if
you hear that?
Once you contract on this home, regardless on if the buyer purchased the home or not, we will purchase the home. So they're letting the seller know, regardless, on contract date,
correct,
we're going to purchase that home.
If that buyer falls through.
Even if the buyer falls through.
Even if the buyer falls through, we're going to purchase a home. The only thing with the ribbon program is that you have to put up 2% earnest money.
Okay.
And 1% will go to ribbon, and then 1%, of course, back to the buyer. Now, if for some reason the home doesn't close, then 2% goes to the ribbon program. But it's one of the best options there is, because you're not, even though the things that we all talked about, the different options, it's no better option than someone saying
Cash.
Cash.
That's right.
And it's different when you come and you're being in front of even the people who are making more, who are putting in
More money down.
More money down. And that's the thing that I see more often, where you have that ribbon program that gets in front, where they're saying we can do cash.
So for our realtors listening, it's basically the same as cash offer, which makes you more competitive than a FHA, conventional, or any other loan product that you can offer.
Right.
But it's up to us to communicate that to the agents and the sellers.
Right.
So they're not thinking that this is some tainted type of program. It's actually a level of surety and certainty that needs to be talked about.
Kim? I like the fact that it gives the buyer an edge to be able to compete with a lot of cash investors.
There you go.
Right.
And we have a lot of cash investors, but that doesn't matter.
That's it. We have a lot in this Houston market. And so that leads us into our next discussion.
Well,
This market let's just call it what it is and give the people what they want. They like stats.
You know what? Well, I'll tell you this. One of the stats that I was really looking at is that the median age of home buyers right now in the U.S. is 45. In Texas, that age is 47. That's mind-blowing to me. That is mind-blowing.
Like you said earlier, you were taught as soon as you get of age, purchase you some property.
Buy a house.
Yes.
And so how old were you when you bought your first home?
I believe I was 22.
And how old were you,
Oh,
Mike?
wow.
I was 25.
Okay, and I was 27.
I was 29. I was a late bloomer.
Okay.
But I got there.
Not late in today's terms.
That's
With
true.
45 and 47 being the median ages, I mean, that speaks volume to what's going on in this market.
Right.
We have young professionals that are not able to enter into the market.
Exactly.
Right.
And being forced to have to rent.
Yes.
Right. Or they're not seeing it as a priority. So you have a lot of people who don't see home ownership as much as a priority as others see it, which they should. It's not a thing that's put into the forefront a lot. But you gotta own a home. It's, when you leave college, it's more so get a job, go to work, make your income, and get out on your own. But there's nothing in there that says
On your own means owning a home.
own a home.
Got it.
So right here in Houston, we're at about 1.3 months of inventory. We are at about,
Which means that we will sell out of all inventory in about 1.3 months if nothing else goes for the people who are listening and watching.
so if that means that right now we're at what, May the 11th? By the end of June, all inventory is gone.
That's a real thing.
Right. And so that is mind blowing to me, because when I entered the market, when I got my real estate license, oh my God, we had 8-9 months of inventory. I mean, it was a plethora of
Right.
Yes. So many options. So, okay, 1.3 months of inventory, median price home,
$411,000
$411,000. Yeah, that's where we are
in
right
Houston, Texas.
now. In Houston, Texas.
And 2 years ago, we were at $289,000.
Yeah, I remember that.
Do you remember that?
Yes,
Yeah.
I do.
Yeah.
I sure do.
So it's moving fast.
It is moving
It's
fast.
moving fast, and the slowdown is not soon.
You
And,
don't think so?
Say that. Okay, so
and
you
that's
don't.
the problem, is that you have a lot of people waiting for this bubble to pop.
Right.
I get that all the
Yeah.
time.
Oh, where's the mystery bubble?
But a lady told me the other day, she was like, well, in 2008, the bubble popped. Well, I said it's different.
It's totally
Because
different.
In 2008, we were dealing with subprime loans. We were dealing with statement income loans. We were dealing
We had-
with bad loans that affected the banks. negatively, where banks were going into bankruptcy. But I said, go and look at your listing and see how many foreclosures you see on there.
Not a lot.
You're not seeing many foreclosures.
Not a lot of
because
foreclosures.
you don't have a lot of bad loans. So that bubble is not going to pop because you don't have bad loans on the market. You just don't have homes.
So are you saying, Mike, that you see the market, home prices steadily increasing? This, where we are now, you see us staying on this track for some time?
I see us staying on this track for some time. Now, the interest rates may not increase as much, but those home values are going to continue to rise. That's why I always tell people, get in.
Right.
You want to get in on the front end of this where you're actually sitting in a home.
That's appreciated.
Watching your value grow. Watching it grow. But you can't do that because you're standing on the back end saying, waiting.
Because what I tell my buyers, in February, I had maybe about 10 buyers. Mm-hmm. Maybe I've gotten 3 of those 10 under contract. It's been with new construction. Mm-hmm. Hasn't been resale. Right. Okay. But of those 7 that I still have, 4 of them have opted out
of buying altogether.
I lost them.
Wow.
Yes.
Yeah.
Mm-hmm. Yes. Yeah. So that I have 3 of those 10 that I started with. Yes.
But what we just said, think about this. 2 years ago, if I bought my home at $289,000, it very well could be worth $400,000 today in today's market. Right. So if we're talking to people, those are real numbers. There's nothing in the stock market that's going to give you any type of return like this, and this is an asset that you can hold on to and you can weather the storm, because what we know is that it's cyclical. It's going to come back around.
Right. That's it.
If you pay $2,000 in rent, you'll never see that $2,000 a month again. It goes. You might as well throw it out on the freeway.
And so what I say to people is, get in now, because what's going to happen is you're going to outprice yourself to even be able to afford a home.
And that's what's happening to a lot of buyers who were pre-approved for like your 200s
and 3% interest.
And 3% interest. They've been priced out of the market.
Yep.
Right.
So that's why it's so important for buyers to just break down, find their season, to just go in and jump in and purchase a home, because we see it a lot. We see these buyers who just
missed the window.
You missed that window, and that window is getting smaller and smaller these days for you to jump in, because the interest rates are
affordable side.
So that's the advice that you would give before you leave. What can you tell a buyer in today's market? What advice can you give them right now that's going to help them through their home buying process, or even to get started?
My advice right now is to find you a great realtor, like the realtors here, who are educated, who are knowledgeable, and then find you a great lender that will kind of lead you to your different options. And don't hesitate just because you don't think your credit is right or whatever. Your credit, when it comes to purchasing a home, is totally different than your credit with anything else. So sometimes you think of your credit as not being that good. It may be good enough to purchase a home, but you have to let us see. Mm-hmm. Let us see. Let us give you a roadmap. Let us give you a plan. And then you have something that you can work on. But my advice every single time is, let us make a plan for you. And then you can just keep going.
Exactly. That was excellent. Well, Mike Lewis with NRL Mortgage, thank you so much for sharing some time with us and your pearls of wisdom. You have blessed us. You have blessed our audience.
I always love sitting with Mike.
Yes, and we look forward to the next time. But this show is over. This show is over, and we look forward to seeing you again. Marla, Lisa, Kimberly, your real estate experts for the Houston-Harris County area from Red Door Conversations. If you missed any of the show, check us out on YouTube. But until next time, bye-bye.
Bye.